All right, good afternoon, everyone, and welcome to class number 5 of the Darshan Speaks Masterclass on Capital Conversations, where we provide you with the tools that you need if you are founding looking to raise capital from investors within the next year. So this class 5 I'm really excited about because we have a special guest, Nia Jackson McClure, who is going to talk about what do investors really want. So I'm going to read her impressive bio a little later. So whether you are looking at this on my YouTube channel or on a recorded video, or you're looking at this live, we want to make sure that you are able to take advantage of all the great information that we're going to have here. So welcome. Many of you know that Darshan Speaks is a business coaching firm, and we work with growing companies to transform them into attractive companies for investors by focusing on 5 key business areas. And we do that through legal consulting and business coaching, because I am a licensed attorney. So this mini course is designed to give you sort of a start to finish brief overview of what it takes to raise investor capital. And like I said, we are on class number 5. So if you want to check out the rest of those master classes, just go on to my YouTube channel. It's just /Darshan Speaks. A little bit about me. I'm a 15 plus year corporate securities attorney where I have helped companies nationwide raise billions of dollars in private investment capital through legal advice and business consulting. And I am also a registered investment advisor and help companies save millions in unnecessary court costs and fees. So I always like to start with a story. So I have a story. So I had a potential investor who was in real estate that came to me with this absolutely brilliant pitch deck. And it was colorful, and he spent a lot of money on this pitch deck. He hired somebody to do it, all these graphics, all this great stuff in the pitch deck. And eventually I had to go through the pitch deck with him and break the news that actually the pitch deck was not what investors wanted to see in the pitch deck. It was, a lot of it was, sort of focused on mission statements and vision statements, but it never told how the investor was going to get their money back. It never even asked the investor for the amount of money that they were going to raise. And so that is just a cautionary tale that a lot of times people put together these fancy pitch decks, and at the end of the day, the investor does not, they care about it, but that is not going to get them to open up their checkbook and to write you a check. So you really do have to know specifically what investors want and what the investors that you are actually going after want, because all investors are different as well. So if you could save your questions to the end, then that would be great. Last class, before I introduce Nia, last class we went over the 5 F's that are part of our business coaching program as sort of a guideline for how do you prepare to raise capital. That was our last class. How do you prepare to raise capital? So the first F was foundation, where we really go over all those normal things that you would expect in a business. What is your product or service? How is it different? Who are your competitors? Things like that, to really make sure you understand what it is that you're selling. The second F is making sure you have the correct framework. That means making sure that you have the right people, places, processes in place in order for you to be able to actually execute on your great ideas. So coming up with what that framework looks like is important. The third F we focused on was financials. Of course, that's the heart and soul of it, right? Because investors want to know the numbers, want you to know the numbers, and they want you to also understand those numbers. So we go through what your financial strategy is, how will you raise capital, what legal compliance mechanism will you use to make sure that you raise it correctly, how much you want to raise. We go through a lot of numbers on that third F. The fourth F is forward thinking. So investors want you to be able to scale, and usually pretty fast. So no matter how great your idea is, how great your team is, how great your numbers are, if they're not going to be able to see that return on investment in a relatively quick time period with a good return, they are going to shy away from writing that check for you. So we came up with the strategy of how it is that you scale your business in our section called Forward Thinking. And then the last F that we do during our 5-course business coaching plan is really focused on future. So after you have raised your funds from your investors, that is not the end of the relationship with the investor. As a matter of fact, it's only the beginning. So a mistake I see founders make all the time is they think they're raising capital from investors and then that's the end of the relationship. In order for you to make the most of your relationship with your investors, because you might want to actually raise a Series A round, a Series B round, you might keep wanting to raise. You want to make sure that you have a good base of investors that you can either go back to or will sing your praises. So we focus on putting in place what I call an investor relations strategy to make sure that there's a specific person that can communicate with your investors. It talks about the frequency, the tone, what happens when there's crisis. Making sure that you manage your investors after your raise is highly crucial. It keeps down on your legal costs. Believe me, I know. And so that is what we went over last class. So we focused on foundation, framework, financials, forward thinking, and future on how to prepare to raise capital. Now we're going to talk about what do investors really want. So let me introduce my friend Nia Jackson McClure, who is going to give us some great information. So please make sure you're writing this down. So Nia is a dynamic business and funding consultant with Transcend Commercial Capital, helping train and coach women and minority-owned businesses on how to grow and scale their business. She brings over 13 years of experience in the banking and financial market, specializing in business development, management, organizational and leadership development, training, and corporate facilitation and change management. In addition to her role as a commercial capital consultant for entrepreneurs, she has served as a certified SCORE mentor, consulting for GuidePoint Global, and participated in HubSpot's 2022 Customer Advisory Board. Her coaching formula has helped entrepreneurs improve their funding access and leverage capital for improvements like increasing cash flow and market expansion. Nia helps both aspiring entrepreneurs and business owners wanting to transcend with the growth they thought possible for their business. Her clients have received funding ranges from $5,000 to $3 million. She has also helped build corporate teams in over 25 states throughout the U.S. and knows how to help women and minority-owned businesses position themselves to compete in the commercial funding markets. And she'll give you all the information that you need in order to contact her. But without further ado, I want to hand it over to Miss Nia Jackson McClure. So thank you so much for joining us, Nia.
Thank you so much, Darshan, for that beautiful intro. You all, welcome. Thank you for joining us tonight for Capital Conversations. Darshan prefaced with kind of what the last class was. So if you were on the last class, you got to get a little bit more information about those 5 F's. And today we're going to keep it moving with some 5. So 5 is a really good number because we're going to talk about 5 C's that lenders and investors will be looking at when they are assessing, hey, are we going to fund this business? So you all got my lovely bio. So we will get right into sticking with that 5. And hold on one second. Let me stop share. We need to do a new share. Let me know if you all can see my screen here. All right. Thumbs up. Awesome. Wonderful. So everyone can see the screen. So we talked a little bit about financials in the last class, the last master class. And we're going to kind of start there when we talk about these 5 C's that lenders and investors are looking for when they're considering, are we going to fund this business? Is this a viable business for us to make sure that we give money to and invest in? So what are lenders looking for? So for our purposes, this is going to be, a lot of this is going to apply to both lenders, so your banking lenders and your private lenders as well as investors. And so I'll make the distinction as we kind of go through some of these things, but as a core, those 5 C's are really, really essential. So we're going to talk about those as they kind of relate to what it is that's going to help you get funding and secure things in the future. So the 5 C's, and if you have an opportunity to take notes, please do. I know this is going to be recorded and available for later, but the 5 C's can essentially be broken down into these few things: character, credit, cash flow. We're going to talk about that on that financials piece, one of those core F's that Darshan introduced on the last class as well, capacity and collateral. So some of the things as we kind of get into talking about stability story, a lender and an investor wants to know, what is the stability in this business? And all of those different components, all of those C's make up what that looks like. Some individuals may say, okay, well, I know that, credit is something that if I'm applying for funding or something to that degree is something that may be considered. In addition to that, in the due diligence process, your investors may look at that as well. They want to see how you've historically managed money, which we'll kind of get into. But essentially the same way that your reputation may precede you for how you do business and how you attract your customers, investors are going to be looking at a lot of those same things. So some core things to keep in mind. We always like to give people some target metrics here. Some core things to keep in mind when it comes down to general credit type of things is utilization. How well are we managing the money that we do have? When it comes down to investor capital as well, something that is considered is, if I give business owner X or business X this wonderful equity injection, how am I going to see my money made back? Okay, so essentially, am I going to see this business use this strategically over time, where I can see that they're going to be able to get this profit back? Or am I seeing them, kind of run through with a little bit less of that plan? And a lot of the times that will be reflected, or how that may be assessed, maybe by that credit profile, and say, hey, if this, person or this business has had 100,000 exposure, if they have had 100,000 invested into them, how quickly have they used that? What does that look like? Are they paying that back responsibly? So as we kind of think about the overall business itself, the team is a huge part of that. As an owner, what are you bringing to the table? As an owner, if this is a new business, right? A brand new business seeking funding for the first time, and we're saying, hey, invest, what does my credit profile actually look like? What does my picture paint for this person who's interested in investing in this business? Do I show stability here? Things like, whether or not we have shown responsibility for a high amount of debt before, such as a mortgage. A lot of people have recognized, and there's been some studies on this, but it can be more difficult, right, to qualify for a mortgage in some instances than it may be for other types of, say, business funding, right? And the stability of an owner has a lot to do with that. All right. So revenues and income. Now we're going to get into those financial pieces. Finance, we know that's one of the F's, the financials. That can be broken down into a few different things that your investors are going to be looking at. Okay, so we're going to talk about some of those indicators. But essentially, what we want to know is, if we are pouring X amount into this business, how are we going to make our money back 2 and 3 times over to ensure sustainability, right? Whether that's we're looking at private money, or whether that's we're looking at investor funding. All right, so I'm going to skip ahead a little bit to what some of those financial pieces are, right? So this is the meat of it. Historically, investors want to see how you manage money. If this is a new business, and there is no track record, a lot of the times they want to see those projections. Those projections are often going to be 3 to 5 years out. Okay. Historically, if this is a business that now we're at a different phase of growth and we're ready to have investor funding and we have some cash flows going, there are some essential things that that are going to be a part of that financial package. Some of those things are going to be the bank records. So how have the revenues been coming into this business? What can we see as far as how these revenues are coming in and how sustainable they are? Are they consistent? Industry may have a lot to do with that. We know that there are industries that are seasonal. You know, they have higher periods where, you know, maybe there's a heavy contract period of time and maybe summertime, for example, maybe construction businesses, for example, have a higher degree of work that is occurring at certain points. So historically, what does that look like? What does that last 6 months look like? Are we talking about $10,000 in deposits in 1 month and $100,000 in another month? How consistent is that as far as a investor can see? What does this look like? Tax records. Darshan dove into this a little bit or introduced this a little bit as far as making sure we're compliant on tax records. A lot of the times we know as business owners, we want to be able to take advantage of those tax breaks and things like that. But are we taking advantage of those in a way that still show profitability for the company? A lot of the times investors want to know that they're going to be able to make their money back 2 and 3 times over, and they're going to start seeing that return on investment within a reasonable time period. So they want to know, are we being responsible? Are we making sure that we're managing those expenses as well? A lot of the times they will want to see historical records of that over the last 3 years or 3-year projections if this is a business that's not in existence yet. Business registration. How is our business set up? Again, we want to make sure that everything is consistent. At this point, we want to know who is the ownership. We talk about team a lot. How is the team set up? Are we talking about a minority-owned business, a woman-owned business that has the opportunity to have additional funding opportunities under certain certifications? Those things are important to have laid out and that an investor will want to see. What does that team look like? Who owns it? What's everybody's role within the team? How are they contributing to that business? Assets and debts within the company. This is a big one as well. There are a lot of ways that within assessing a business, looking at a valuation, that we can say this company has value X. One of those things is the assets that a company has. If you are a doctor's office, for example, and you have X-ray machines, that would be considered an asset that has value, that when an investor is looking at this, they can say, okay, should push come to shove, we know that this business may have a lower degree of risk because they also have high value assets attached. So those are some things that investors are considering as well. Debts. Does the company have debts? Something that, and Darshan likes to leave with a story. I'll share a story as well as we kind of get into some of these last minute things before we kind of share a few more things and take questions. But so we had a wonderful, profitable company that was doing about 700,000 in revenues. They actually had a really strong profit margin. One of the things, however, though, that they did have, and this actually ties into credit a little as well, but one of the things that they did have that was unknown at the time, or that they had forgotten about and kind of brushed under the rug, was a tax lien, a significant tax lien that definitely affected the ability or their ability to be able to get funding. Anything that is owed under the business or under the business owners, those are some things that will also come up in due diligence that a lender or investor may want to know about, right? So that we have and the point of that is to have a clear picture of exactly what the company financials actually look like. Once expenses are paid, once everything is taken care of, what is the profitability of this company and future projection. Okay. So those are a few things that investors are going to be looking at, that they're going to be assessing, your team, making sure that you have your items in place. And this is something too that Darshan said on another on a previous session that is really key. You may not, as an entrepreneur, you may not have, you know, all of these pieces figured out. There are a lot of components. This is where having that qualified team comes in, where, you know, if you're utilizing Darshan for, you know, to make sure that your legal compliance is in order, or if you are at a point of expansion and you need to make sure that you have a business consultant helping you along the way to make sure those things are in order, those are some critical components to have as well. But this is a really, really, really key piece that is often slept on when it comes down to entrepreneurs seeing the maximum potential for investor money and the maximum potential for funding within their business, is having those qualified professionals wherever we can have them to prepare our businesses for that next level of funding. So at this point, what I'm going to do is pause and take some time for some questions. I know that in the deep dive of due diligence for investing, there may be some questions on some of these things, some of these pieces of documentation that may be needed, some of these processes. So I'm just going to pause here and let anybody ask any questions that might have come up from this.
Thank you. And for those that are looking at this recorded video, if you drop comments in the comment section of the YouTube channel, I will pass them along to Nia. Or Nia, can you give some, oh, there it is. If you need to keep in touch with her, then please reach out to her. While people are maybe formulating those questions, this is timely because the second masterclass that I did with Jeff Patterson, who is with the Small Business Administration. He's one of their top lenders. And so he did a similar slide. It was a lot more detailed, but it was about SBA loans and the different types of SBA loans. And I've been doing work with the SBA for a while, and they came up with loans I've never even heard of. So if you're listening to this, go back to my YouTube channel and search for Masterclass number 2 with special guest Jeff Patterson. I think you will find that very, very useful in conjunction with this presentation. And all my masterclasses are under a playlist under my YouTube channel. So if you miss anything, you can always go back, refer back, take notes, download, whatever you need to do. This is all very, very good information. But I'll stop now and see if there are any questions that anybody has.
And one more thing while we're waiting to see if anyone has any questions. This, if you scan this QR code right here, this goes to our Funding Smart Guide. So if there are, if there's anybody on the call or anybody watching this recording, you're saying to yourself, hey, I know that there's a lot of these documentation or a lot of pieces within this that I need to get together. Some of the things that we look to do within helping our clients is making sure that being prepared for that process, you're able to outline how you need to use that funding, what that funding is for as well. So any of these resources, by all means, you can scan this QR code that has links to everything, LinkedIn, the website. If you just need to, hey, I need to figure out exactly what it is that I'm looking to target for my funding. All of that is things that we can help with. But by all means, you can scan these, get in touch with us through social, LinkedIn, all of that good stuff if you have any questions.
Thank you. Thank you so much. Well, hopefully everybody was able to take advantage of all this great information. And like I said, these mini courses are just designed to give you some perspective. You can always reach out to myself or any of our special guests that we have, and ask us any questions that you may have. So if you're viewing this as a recording, we are still here for you, even though you are not here live. We know a lot of people are traveling, kids are about to go back, all of that good stuff, but we'll recirculate this and post it as much as possible on our various social media platforms and our e-newsletter, so you'll have access to it. So next week we are having another class. It is going to be class 6 out of 7. We'll go over the top 5 mistakes that founders make when they are raising capital. So you won't want to miss that. It'll be another great mini course that will sort of keep going in the theme of making sure that you have some of the tools that are needed to really, really raise capital the right way. And then we'll have our last class to sort of wrap it all up. So hopefully these mini sessions have been helpful. Again, you can go back on the YouTube channel, check out the masterclass. They're not very long, so you can take a look at them while you're riding in the car or doing that. And hopefully that gives you a sense of really what it means to be in this investor world. So we appreciate everybody coming out. Please ask people, if you think people are going to be interested in this subject area, to reach out to me or to Nia for assistance with those services, and of course sign up for our e-newsletter, because that is how you get invitations to these master classes and the things that we're doing. You have to sign up for the email list, and that's where we post everything. So we don't post it publicly, only to our email list, because we want to be intentional about providing these resources to people who are intentional and serious about growing their business. So I'll get the last word over to Nia, and thank you everyone for joining us.
Yes, thank you everybody for taking some time out and learning a little bit about capital conversations and what it is that investors are really looking for your business. Again, any resources that you need around preparing for that process, you can reach out to myself or Darshan. If you're looking for lender funding specifically, we can definitely help with that piece as well. And by all means, everybody have an excellent day, an excellent night. Darshan, again, thank you so much for having me. Hope you thoroughly enjoyed this. And again, please make sure that you are registering, stay on these mailing lists. There's a lot of free resources that are continuing to be put out, as far as these videos, as well as some great networking opportunities and future online and possibly some in-person events as well coming up. Again, you got to be registered and make sure you're connected for that. So if you haven't already, please make sure you're connected to all of those platforms, and make sure we can reach out and stay in touch with you about those things.
Absolutely, absolutely. All right, well, everyone have a good rest of the night. We appreciate you joining us, and we hope that either me or Nia can help you get investor ready. So take care, everyone.
Thank you.